You heard me say it before, and I will say it again. Hong Kong is one of the big three among financial capitals in the world, and we are anchored here in Asia. And so now we turn our eye to Asia. Some of the smartest money I know is very bullish on China right now. You just heard a little bit of it there. But there are also opportunities in ASEAN and some of the major economies like Japan. Our next panel has that ability to give us the 30,000-foot view and then zoom right into the micro level to let us know about opportunities in this part of the world. So we're going to be excited to have them up here. You could call them Enoch and the three chairs. Enoch is the Enoch Fung, the CEO of the Hong Kong Academy of Finance, is going to be joined up here on stage today by Fred Hu. Fred is the founder, chairman, and CEO at Primavera Capital. We also welcome a Hong Konger, Jean-Eric Salata, who is the chairman at EQT, and as well, Zhang Lei, who is the founder and chairman at Hillhouse Investments. Enoch, the floor is yours. Let's hear about Asia.
Thank you very much, Andrew. And ladies and gentlemen, a very warm welcome to our final panel. And let me just tell you for sure that we are saving the best for last. Now, throughout this morning and also in the afternoon, we've actually explored now multiple themes about different asset classes. Today, as Andrew mentioned, we are actually going to delve deeper into Asia. Now, before I start all that, I should mention, as I said, this is pretty much a star lineup. They're all founders of their own investment houses, the three of the most influential investment houses in Asia. So we're going to get a lot of wisdom from these speakers today. So this morning, we've done rapid fire questions. We have also done Ask AI questions. I'm going to combine two and do one quick fire Ask AI question. So my rapid Ask AI question is this. I asked DeepSeek, what would be the most market-moving event in 2026 in one word? DeepSeek came back with cyber attack. All right, so I'm going to ask these gentlemen here, so starting with you, Fred, what would you be the one word for shocking the market next year?
Mimic DeepSeek. Think, let him think. R1, R2, R3. Energy.
Energy, all right.
I would go with AI, the impact of AI on businesses.
Okay, so AI.
I would say one word called deliver. We have talked too much. They need to deliver.
That's a good reminder of this panel, actually. So we will move on. Now, as I mentioned, you are founders of your own investment houses, and you are definitely very well reputable across the world as well. Of course, you have got significant operations in Hong Kong. Could you share with us how you actually make use of your Hong Kong operations in delivering the businesses, servicing your clients, and also what you like about Hong Kong in general? Yeah, Fred, I'll start with you again, and then, yeah.
So last 4 weeks, I've been to 20 cities across the globe. But Hong Kong is my home. So I could have been in any of those 24 cities, but Hong Kong is my home.
So, home, okay. Sean?
Well, I've lived in Hong Kong for 36 years. I arrived in Hong Kong in 1989, and I've lived here ever since. And I love Hong Kong. I think Hong Kong is a wonderful place to live and also to do business. And it's where we started our business and where we're now headquartered, not just for Asia, but in my new role as next year nominated to chair EQT globally. I'll still be based in Hong Kong for that. So one of the few global private equity firms that actually has a chairman in Hong Kong. I think Hong Kong, to me, Lei's going to probably mention that we like to go wake surfing. That's one of the things that's beautiful about Hong Kong is that in addition to being a great place to work hard, but you can also, within 15 minutes, you can be on the water or you can be on the trails, as we heard in the HKMA summit. So I think in terms of balance, life balance, work-life balance, it's fantastic.
Yeah. I would add to that because one claim to the fame for me is to actually teach Zhang to wake surf in Hong Kong.
But still learning, but
students better than teachers. I think one thing hugely underestimated is how because every time we have conference and meetings in the central. Actually, just 15, 20 minutes away, you are in the water. And John and I were talking about this. We highlight 4 trails. Next year, the conference, let's highlight the Hong Kong water.
Okay. Yeah, please, Frank.
So I'm not as risk-taking.
John got to contribute his wake surfing video to the.
Yeah, I'm not as wild as these 2 guys, but I love Hong Kong. I enjoy outdoor and hiking, and for really the merit of Hong Kong, I just think for me is very simple. Hong Kong is the best of both worlds. It's quintessentially Chinese, but it's also quintessentially international. There's no place on the planet like Hong Kong.
I once bumped into Fred and Big Wave Bay hiking down from the mountains with a few people, and they had run out of water from their hike. They've been hiking for 4 hours. Fortunately,
Thank you for saving me.
yeah, we were there. I was there with my family on the beach. I gave them a couple bottles of water, and they carried on.
Just so you know, at the pre-meeting, when we were just trying to plan for this, they decided that they're just going to talk amongst themselves in front of you. So I'm happy with that as a moderator. But okay, let's just get to a bit more serious stuff. If I may, Fred, I could start with you. I wanted to get your thoughts on the role of capital markets in China's economic transformation going forward. Now, I want to start off with something that take you down the memory lane. So I used to work together quite closely with you more than 20 years ago. You were a leading market economist on China for Goldman Sachs. Back then in 2001, you published a report titled Das Kapital, Capital Markets Are Transforming China. So that report basically outlined with incredible foresight the role of China's capital market reforms and also its opening up to foreign investors, which also happened to be a great business plan, very profitable business plan for Goldman's investment banking business back then. But it is really important to see how the capital market is supporting the real economy throughout the last 20-something years. So looking forward with all the economic transformation going on or planning to do, particularly under the 15 National 5-year plan, what do you think the role of the capital market is for China's economic transformation going forward? Now, I take it that probably in the last few years we've had the Western media kind of imposing some skepticism, if you like, about the policymakers' resolve in the capital market reforms. But we've heard yesterday from the policymakers at the summit that they are very determined in pushing and promoting the market reforms. So what's your take on that?
Well, first of all, I'm amazed, Enoch, you could still remember the research paper published 25 years ago. Awesome. So as you can tell by the title of the report is Das Kapital in German from Karl Marx. That itself reminds us, this room, investors, that the stock market is the most capitalist of all institutions. And the Chinese leadership, despite all the ideological biases about China, was enthusiastically pushed through capital market development. So 25 years ago, Chinese stock market is emerging, ranking number 8 globally behind each of the G7 countries. 500 billion in total market capitalization, of which maybe 10-20% were free float. So it's really, really insignificant in the global capital markets. And today, Tencent alone is much bigger than the entire market cap of China back 25 years ago. So now, China is second largest after the US, bigger than any other G7 countries except the US. But the good exciting thing is there's still so much potential lying ahead. In terms of market cap, GDP, US is over 200%. That's why, US has a stock market that's over 60 trillion, where China is about 15 trillion. So let's say, it's actually, by the way, Warren Buffett's favorite metric, China is cheap. Okay, there's a far more upside in coming years. Number of companies Actually, there are more populous companies in China than in the US. 5,000 versus 4,000. But again, since the diversity, stock selection, Lei and is expert, that across so many industries, you want to get a diverse equity portfolio. And the bond market the same, 30 trillion, second only to the US. So huge potential ahead, and capital markets are definitely going to transform China and ensure sustainable economic growth. Also empower Chinese middle class to have retirement savings and wealth effect to spend. So make Chinese economy much more sustainable over mid and long term.
Thank you, Fred. So can I move on to Sean? I wonder if you can reconcile something that, building on Fred's comment, something a bit more contradictory, which is that you're looking at the data on the capital raise for China-focused PE funds and VC funds. They've actually slowed quite a bit in recent years because of maybe slower headline growth, the more sort of uncertain macro environment. So as I said, how do you reconcile that? What do you see as the current state of the PE and VC ecosystem in China? And what sort of catalysts are you looking for in kind of seeing a recovery in that market?
Yeah, I'm actually bullish on China, and I'm actually very bullish on Hong Kong as a result of what's going on in China. If you look at the 15th five-year plan that's just come out, the points that are emphasized there, innovative manufacturing, investment in technology and AI, supporting the consumption, the shift to consumption. And the fourth one is really the capital flows in and out of the country and encouraging more foreign investment and opening up of services. That's really going to benefit Hong Kong. And as I look at what's been happening in China, we've been through a difficult period with sentiment and with a cyclical downturn. But I was just in Beijing last week, actually, for a few days, and what you're seeing on the ground in terms of innovation is just mind-blowing. The kinds of the factories that you're seeing and the way they're using robotics in manufacturing. I went to see Xiaomi's electric vehicle factory, which is extremely impressive. If you haven't seen it, very few people there, a lot of robots. And if you talk about what's happening in private equity and venture capital, I would say that the private equity market is developing in China. So it's the buyout market, I'd say, is relatively immature in China, but it's starting to develop. But I think what's really interesting in China at the moment is the sort of the growth capital and the venture capital market with the innovation and the kind of highly innovative companies that you're seeing. And then, of course, the role that Hong Kong is playing for exit and liquidity, which I think has been one of the big challenges for the industry. That's also really opening up now with what's happened in the last 12 months in Hong Kong, with the stock market really coming back to life and global investors starting to reallocate. And just to echo what was said earlier in one of the panels on the kind of rebalancing that we're seeing in the world, we see that as well. A lot of clients that we talk to, particularly non-US clients that we have in our business, they feel like they're over-allocated to dollar assets. They're looking at diversification, and they're looking at ways to rebalance their portfolio. And one of the big beneficiaries of that, I think, is going to be Asia, and is going to be Hong Kong and China.
Okay, next up, thank you, Sean. Next up, I wanted to talk to Zhang because there's this quote-unquote global AI race going on, right? It's quote-unquote, okay? So we can debate that. But the DeepSeek moment earlier this year basically marked maybe a turning point in China's overall AI narrative, highlighting not only rapid model development is important, but also a growing ecosystem of homegrown innovation and also scalable infrastructure. So in your view, Lei, what is actually China's niche in AI?
First of all, I'm not sure this AI race is the right characterization, because I really believe this is not a zero-sum game. It's, if you believe this is sort of the electrification, industrialization moments of humanity, then that's going to benefit humanity at large. And China, rightly or wrongly, just take a different model from the US, which mostly characterized by high power, high capex, closed loop, high monetization model where China is doing a very much a low-cost open source model. We can debate on the models, forever. I don't have any insights specifically on large language foundational models. We're not investing in models. What we are really seeing is, earlier, your first question, I said the word deliver, which I happen to believe that China gonna be probably the first to deliver much more on the application layers. That's what we saw in mobile internet when the apps, coming out from Messenger, WhatsApp, ICQ, and turn out to be WeChat is much, much better super app than any other apps that you are seeing in the mobile world. And similarly, you saw that in the financial services, Alipay and WeChat Pay and Meituan on delivery and Xiaohongshu on the social, and you're seeing way more application layers innovation. If you look deeper in that delivery, let's just use this word for now, that delivery mechanism, you see some logics behind it. Just that quick, fast iterations, R&D engineering dividends, massive use case, readily huge consumer markets that people want to embrace new technology and don't mind trying new things, and a low-cost model of doing that. And I think it's we might well see a lot more in the next stage of application layers that China and broadly Asia gonna be a big innovator in that.
Yeah.
Can I add on? So in earlier first question, I didn't say AI because I anticipate, maybe Zhang and Lei are going to say AI. I mentioned energy. So right now, I think there's a race, but unlike people in Washington, the race is still ongoing. Right? It's like a marathon, not a sprint. I don't know who will end up in the finish line, and I think I don't want to be dismissive of U.S. leadership in AI, but I very, very, very confident China will be a leader in the AI revolution as well. So AI is quintessentially linked with up to data, with the human talent engineers, and with electricity, right? Compute power. It's not just compute, but also power. So China has the world's most advanced and the largest electricity power infrastructure. So the country generates 3.7 terawatt. Okay, that's more than 3 times as big as the US. And in fact, every year, China grow the grid capacity by around 18%. US now, there's been a lot of investment into power infrastructure, since 2023, 2024, but it's about 3 to 5% annual growth. So I think this alone would also show, China has tremendous promise in AI revolution.
Okay, moving on to the rest of the region. Thank you. That's very insightful. I wanted to maybe go back to Zhang about Japan. There's been quite a bit of interest there, probably because of deregulation and corporate governance reforms and everything. You're doing quite a bit on that. Can you share with us your insights?
Yeah, I think Japan it's a deregulation and corporate governance story. So 2019, they passed a law called the Fair M&A Guidelines. And in 2023, they passed another set of guidelines called the corporate takeover guidelines. And essentially, the first one was about the need for public companies to establish a special committee if they receive an offer from an outside investor. And the second one kind of took it further and made it a kind of a fiduciary duty of directors of the board to take into account shareholder value primarily over the interests of the board members and the management team, which historically that's not been the case. And so the combination of these big regulatory changes has led to, and they've really stuck with it and backed it with a lot of other enforcement measures, has basically led to a surge in shareholder activism in Japan. You now have over 100 shareholder activist funds in Japan. And what these guys do is they come in and they take a 5 or 10% stake in a listed company, and then they agitate for change. And so they are causing a real upheaval in the corporate environment in Japan. And there's also kind of a mindset shift now that's backed by the government, which is that you now, if you're a publicly traded company, if you're a corporate generally in Japan, you need to take shareholder interests into account, and you need to focus on your core business, and you need to figure out how you drive value in your business. So this has resulted in a huge surge in deal flow and a huge surge in private equity activity. And so it's now, I think, a $40 or $50 billion M&A PE market. This year alone, it's already $40 billion of investment in Japan, up sort of 50% year on year. And for us, it's become actually our most active market in the region. We've just signed a $2.7 billion take private of a large elevator company in Japan called Fujitec Elevators. And we're just seeing more and more activity like this. And historically, generally in Japan, you've been able to make good money on investments because there's a lot of undermanaged assets. There's a lot of sort of inefficiency that's in the system. And once you get better governance, once you get an active management team in place, there's a lot you can do very quickly to drive value creation in the businesses.
Yeah, it's great insight. So Fred, for the rest of the region, particularly Southeast Asia, there's been sort of, the market is growing. China plus one has been kind of the main catalyst for driving interest, but access has been a problem, right? And also the market has been quite fragmented. Any thoughts on your side, Fred, on Southeast Asia or just rest of the region?
So, South Asia is tremendously promising economic growth and middle-class innovation and investment opportunities. But unlike China and unlike India, it's not homogeneous market. It's quite fragmented, right? So I think the regional integration is really, really important. So you don't think of just individual markets. Oftentimes they are pretty small and has all the idiosyncratic risks in terms of regulation, law, and the business culture. But I think as ASEAN makes headways in free trade integration, and particularly for Chinese companies, actually they are the single biggest direct investor in ASEAN, and also the biggest trading partner, right, with the ASEAN. I think we go there with our portfolio companies. So they have boots on the ground, they have operations there. So we help us understand the risks as well as the opportunities.
All right, thank you. That's very useful. Now, we still have about 5 minutes or so. I wanted to also hear your thoughts about running your businesses, because at the Hong Kong Academy of Finance, one key mandate is really promote leadership development. So I'm hoping to hear your thoughts about how you grow your leadership team. What are you looking for? Any particular initiatives that you put out with your firm that actually helps to promote leaders? And what was the result in helping or making an impact on your firm's performance? Zhang, can I start with you?
Sure. Our culture, we always emphasize intellectual curiosity, intellectual honesty, and the teamwork, and typically exemplified in the financial institutions, professional service organizations. But what we found over the years, one of the best training grounds actually sending our promising, top-performing young employees and associates to work in our portfolio companies. Actually, they work inside portfolio companies for a couple of years and coming back. We found that it's tremendously helpful to them and adds a lot of value in our own investment discussion. They just got into the nuts and bolts of running the businesses on a daily basis. A number of our partners actually now in the firm work in the portfolio companies and coming back, and they do really great job, and they have so much better understanding on the operation level. So I thought that would, now we almost like getting a bit more program, rotating people and getting people running different businesses.
Sean?
I think there's a difference in our industry between doing good deals and building an organization and building an institution or building a franchise. I think you have to make good investments and know how to be a good deal maker in order to stay in business. But in order to scale and to become a real franchise business, you need to develop an organization. And that's a slightly different skill set, and it's a slightly different emphasis that you need to put into your business. And that's something that we've really focused on over the years. And I'd say a few things that we've done that have worked well for us. One is to really promote from within, always promote from within, and to build a culture that is a sustainable culture within the organization. So if you look at our partnership, we have almost 20 partners in the firm now, just within Asia, and the average partner has been with us about 17 years. So it's that kind of culture of continuity, number one. Secondly, we do a lot of mentoring internally, where we assign a sort of a senior person to a very junior person, and I actually do 1 or 2 myself a year as well, where you just continue to sort of stay in touch, see how people are doing, help nurture the talent, and sort of help to grow the talent internally. So I think just emphasizing talent development is a really important part of our industry, and going forward, it's going to be even more important, because at the end of the day, coming back to the point that Lei mentioned about delivering and performance, which is what it's all about, and distributions, it boils down to the team, your talent, your capabilities as a firm. So investing in your capabilities and making those capabilities more repeatable boils down to how strong your team is and how much effort you're putting into that.
And one touching point is that you actually do the mentoring yourself to the juniors as well. Is that what you mentioned?
I do some. Yeah,
Not
all of the partners do, but I also get involved. I put actually a lot of emphasis into the year-end review process because I think it's really important.
How big is the team then? Are you, in terms of your operations?
We have 350 people across the region, of which about 180 are investment professionals. That's a big team.
All right. So this is how you manage, as you sort of look into their performance reviews and stuff.
We have a pretty automated, internal review process where we have a very systematic way of doing the year-end reviews and setting objectives, and each of the partners, each of the managers would review people within their organization.
Great. Fred?
Yeah, so I agree with some of the great insights shared by Lei and Zhang. So I do emphasize the importance of mentorship. That's reflecting my career at Goldman Sachs. I was fortunate to have great mentor like Hank Paulson and others. And I myself also served as a mentor for many of the upcoming leaders. I think that's really, really important for leadership development. Second, learning. Our industry is full of bright, ambitious people. But I also want to make sure people have a bit of humility. So they obviously know what they know, but they should also be self-aware of what they don't know. So if there's any gap, it's really learning, right? Lifelong learning. So even though you have all the basic degrees from the best university of Tsinghua or Yale or Harvard, you still have a lot you don't know, so you have to keep learning. So when I travel like crazy, but when I go to office, meet the people, senior people, the first question is, what book have you read, last couple of weeks, right? So then they'll share something, and actually, in fact, we have a book club, and some we even share in the WeChat public account, but mostly among ourselves. I think this lifelong learning, I think is also critical ingredient for leadership.
So great tips, secondment to portfolio companies, take care of the review process, you hands-on on that, and of course, as Fred said, the mentorship as well. So quite a lot of, and book club, sorry, I should mention. So thank you very much. Unfortunately, we have really run out of time. I would want to listen to them more, but I'm sure you all agree with me that they have definitely delivered. Again, thank you very much, gentlemen.